Hey, warm good morning, participants. Today for the second day session for getting proficiency in GST compliances, where we have our eminent speakers, Venu and C. Rajesh Kumar here, and our secretary, Sir Pannara sir, is also present. And I wholeheartedly on GST committee on behalf of SIRC, I wholeheartedly welcome all the speakers and Pannara sir for the and participants for today's session. And as we got a requirements from the participants, we have many questions has come. So we may extend the session for Monday also from the same time 11 to 1 o'clock. So I request all the participants to join who are having a questions can join tomorrow also from the same time 11 to 1, and you can clarify all your doubts today, as the remaining portion of the things will be covered by Venu sir and Rajesh sir today. And if you have any particular questions, will be taken out. All the questions will be taken by tomorrow or 11 to 1. And where the link what you have shared is today is for only 2 days. Now the tomorrow's link will be sent separately, and feedback form is also presented. It will be given to you at the end of the session today. And whoever participated 2 days session will get a participation certificate for the session what you have attended. Please, I request all the students and participants to fill up that feedback form and give us a right feedback for us to consider for the next improvement upon our programs which we are conducting. And just today, if you are fill up, and then we'll get a e-participation certificate also. So and again, we have an option to attend tomorrow also the same session. You can clarify all your doubts and questions by tomorrow's the same time 11 to 1. That's what, just for your information, we are telling to you all your information. And sir, Pannara sir, as we are discussed tomorrow, the same question and answer session will be there, sir. And that's what, Venu sir, you can continue the same session with your remaining topic, whatever your left out topics today, sir. And over to the speakers. Thank you, sir.
Thank you, sir. Thank you, sir.
Thank you, sir. Welcome, sir. And thank you, Chairman, for extending the session for the day. Good morning, students.
We should thank you for your time, not we.
Yeah, that's all. That is, we have to thank the speaker, sir, because your time is much more important than for us. And also, students is also learning, and they are taking it in the right spirit. And definitely, this session will definitely give a hands-on experience on how to file the GST returns with your eminent efficient knowledge, sir. Thank you, sir.
Before you start, sir, I congratulate students also for the overwhelming response in numbers. Plus, the number of questions, both are really laudable. So, all the best to the students. Happy learning. Over to you, sir.
Okay. Thank you, sir. Okay, students, good morning. So let us continue from where we have stopped yesterday. We have understood GSTR1. So today is about understanding GSTR 3B. So before we go to 3B, let me quickly do a recap of GSTR1. And GSTR1 had 13 tables, starting from table 4, where you are filling the data. 4 had 3 subtables, 4A, 4B, 4C. 4 is taxable outward supply to a registered person. 4A is forward charge, 4B is reverse charge. So table 4 is B2B outward supply. Table 5 was B2C large. Table 6 is supply of zero rated, which is exports with pay without pay, SEZ with pay without pay, and deemed exports. Table 7 was B2C small. Table 8 is nil exempt non-GST supplies. Any corrections to table 4, 5, 6 is carried in table 9A. Debit notes, credit notes reported in 9B. Correction to table 9B, which is debit note, credit notes earlier reported, was there in 9C. Amendments to table 7 was B2C was there in table 10. Apart from this, we should also report advances received, advances adjusted, that's there in table 11. Then lastly, we have the additional information, HSNY summary and documents issued. This is what has to be reported in GSTR1. Now friends, there is a huge difference between a theory and practice. Like how much ever you learn auditing book audit standards. Unless you get onto the field, make your hands dirt, really learn the thing, unless you touch that voucher, make a feel of that voucher, really look at what is the date, where does the date reside, to whom it has been issued, unless you have that experience of touch and feel, you may not be really appreciate about yourself that you will be able to do. So what we are going to do in today's session is give you that the practical touch of how it needs to be done. Of course, there are various ways of doing it, but once you get a hands-on of it, and you will be able to do it. And trust me, if you think that okay, you are unable to do, it's just a mindset. It's just a block in your mind that something is not possible. Including when you look at a Bare Act or any textbooks for that matter, you know, the matter of the fact, the book which you are reading is written by another person, another human being, whose wisdom is little higher than you. So if you also gain that knowledge, if you get that proficiency, eventually you will also reach to a stage and where you will be writing. And when you will be authoring something, you will be putting your thought process into multi-domains to check that all the aspects to be covered. Likewise, someone who has designed a GSTR1, look at this way, they intend to cover everything in the credit side of the P&L. Along with that, there is a difference in the time of supply between GST and the books of accounts. Every act will have their own definition of revenue. Like under income tax, there is a definition of revenue. Under accounting standards, there is a different definition of revenue. So like that, there is a different definition of revenue under GST, which is time of supply. Like earlier stuff, if in case of services, a receipt of money or the billing. So everything has to be accommodated and it has to be reported. That is where GSTR1 has been presented. Now let me take you to the practical aspect of it. Let me go to the portal. So the GST portal, that we call it as common portal, it is gst.gov.in. gst.gov.in, goods and service tax portal. This is the portal where you will be reporting all your transactions. And what do you need is a username and password. The moment you enter the password, it will ask for a CAPTCHA. You just need to enter the CAPTCHA code. Here is where we logged in. I will be showing you both IFF and the GSTR1. There are various options. Once you navigate, we can directly jump to the returns dashboard. You have an option to see historical data. You have an option to do enter the new data. Now, I have to file a return for the month of May. I have to file a return for the month of May. I can see, you can see here GSTR1. You can see here GSTR1. The due date they have specified, whatever is the due date. These dates keep changing. Generally 11th is the due date, but however, the government owing to COVID has given a 15 days relaxation. So from 11th it has become 26th of the next month, which is in the current month, June. So I have, what did I choose? I have chosen financial year 21-22 May return, and I am going to GSTR1. Now, here where the difference between theory and practice comes. You don't find the tables what you have, what I have said. It is not in like a chronological order. That the theory part, they have listed everything chronological order. But when it comes here, you will be seeing the data in a more organized way from the portal perspective, user perspective. So they have given 4A, 4B, 4C, which is B2B taxable outward supplies, 6B and 6C. 6B is supply to SEZ, 6C is deemed exports. Then B2C large is in one section. Debit notes, credit notes is in another section. So basically you will be able to do a data entry all in one go, right? So they have given all the data grouped into various places, so that the from the usability perspective, this is basically from user experience, what does the data entry do. Like wherever you have a line wise reporting, they have given here in this first section. Wherever you do a bulk data entry, what do I do a bulk data entry, which is B2C others, B2C small, exempt, nil rated, non taxable. So they have given the bulk data entry in this section. I will walk you through the different tables. Taxable outward supply, and my dear students, as the chairman of the session mentioned, that we will have one more session which is tomorrow, purely to answer question and answers whatever you have. There are a lot of people, students have posted many questions, and while we are answering those, maybe some of the law relevant provisions have to be explained, or maybe the portal has to be explained. So we will be taking up the Q&A whatever possible today, and predominantly all the Q&A will be taken tomorrow. So you put all your questions, we will take up the questions, we will organize, group them into section wise, and we will take up those questions. Let's get into reporting of my B2B section. Now, what are the modes of reporting? If I have to say what are the modes of reporting, I will explain you in little bit in a more a detailed way. Now imagine that let me take a blank thing. Imagine you have to do a data entry in GSTN. So GSTN is a central repository. You have to do the data entry. So all the data for GSTR1. Yes, sir.
Your voice is bit disturbed.
My voice is a bit disturbed.
Oh.
Is it's not clear?
It's okay. Now it's clear.
There is some crackling sound. I don't know, is it with headphone or else with anything running at the back?
1 minute.
Just see, is a mobile phone nearby your microphone or something, so that just move it away. So it might. It continues, but now it's. I hope it's fine.
Now it's okay. You can please proceed.
No, sir, we can't hear you now. Sorry. No, sir, you're not audible now. You just choose the other audio option. So whatever was there earlier, you can choose the same option. Only thing is that maybe that due to mobile phone or something nearby a microphone, it was possible somewhere.
Okay, I can hear your voice. Can you hear me?
Now you are audible. Now you are audible, so you can continue.
And it's clear?
Yeah, it's clear now, sir. Good.
So if there is any, so now we have to do the data entry into GSTN portal. Now when I have to do a data entry into the GSTN portal, so I can do a data from multiple ways. Imagine you have your books of accounts which are there. Now the books of accounts data has to come to the GSTN. What are the modes you can use to get the data? One, you can do a data entry. So you can do a direct data entry on the portal. The another thing is government has given an offline utility. Why offline utility? It is basically an Excel. Offline utility, it is an Excel where you can, it's easy, you can enter up to 10, you can do the data entry. But beyond 10, it is difficult. You can upload a JSON file. you can upload a JSON file. That's also permitted. So from your books of accounts directly you can do a JSON and you can do an upload of it. Then you have a connectivity through ASP and GSP. So you can have a tools, the third-party utility tools who will give you different methods of doing the data entry. So you can use any of these methods to enter the data, or the books also can be connected. Okay, so connect books directly. Today we have tools to do that. So people can do any of these methods, and upload it. Now those who are using Tally, from the Tally we can automatically generate the data, and all the data can be posted to GSTR1. So there are not just there is only one method of filing the data. Eventually the objective is we have to get all the data reported into the portal. Now once the data is reported is when you will be able to see the information. Let me show you how the information would be. Now I will be going to the past data just to show you how the information would look like, and I will be taking the previous year Q4 so that I can show you IFF also. I am taking January. So Jan Feb you will be finding it IFF. So in the month of January, you will see invoice furnishing facility. So the data has been uploaded through invoice furnishing facility, and you will be seeing it even in the month of February. So once when I open IFF, what you are able to see in the IFF is only that information which is entered. That information which is entered, which is only B2B. That's what I have said. But when you see for the month of March, it will not be IFF. If you remember yesterday, I have mentioned under the QRMP scheme, month 1 and month 2, they will upload through IFF, and in month 3, they will be filing GSTR1. So month 3, they will be filing GSTR1. So you have seen that in month 1, month 2, IFF was there. Now let me take you to the Q4 March month. Here I'll just show you February also. Even February, you will be seeing IFF. Now, when I select March month, you will be seeing GSTR1. So the first 2 months is IFF, third month is GSTR1. So that the returns are filed, and it is also showing on the screen that it is quarterly. Let me just quickly show you the data which is filed instead of doing a data entry. You can easily see whatever information which is there. So you will be seeing once you log in, all the data that is filled, you will be seeing the data in various styles. You just need to select any 1 month and or any one thing. You will the moment you click on you can click on any record. It will be showing all the information that you have entered for that each invoice number. So each of invoice number that you have entered, you will be seeing all the information. Here most of it is the services, so it is at 18%. So each rate wise, this is what yesterday Rajesh sir was mentioning, that there are different rates of taxes. So each invoice you will be reporting under each rate. That is how you will be reporting of the data. For some reason, if you think that okay, let us take this invoice number. For some reason, if this invoice is wrong, all that you will do now, you cannot edit anything that is entered in the next upcoming return that needs to be filed. Now, what is the upcoming return that needs to be filed? In the month of March, in the month of May, which is in the Q1 of this month, in the month of May, when I am filing my return, I can go to my GSTR1 and correct a record that has already been filed. So I will be selecting the respective month which has been open for filing, and I will be amending an invoice. Where do I amend? I said 9A is amended to B2B invoices. We will be selecting this record, and for which period I am amending? I am amending at 2021. Now you may ask, why am I getting only 2021? Earlier periods, can I not get it? The answer is under section 37, section 10, we have a proviso wherein Amendments can be done up to September of the next financial year. After that, you will not be able to make any amendment. So I am just selecting the previous year, entering the invoice number, and I am saying amend this invoice. So the moment I enter it, automatically all the information that for which it has been filed, like you have seen, it was 25,000 and tax amount. What I can do now, I can change everything. I can change the GSTN ID. Invoice number itself is wrong. I can enter the revised invoice number, revised date. I can change the place of supply. I can put any place of supply. I can change the tax rate from whatever the percentage, 30,000. I can just make the changes. I can make all these changes and I can save. So this is how one does a data entry. And if during the data entry, if something went wrong, someone can come back and correct it. This is how one has to file the GSTR1. Only one thing I want to show before I move to GSTR 3B is the B2C section. What is very important in a B2C section? Here, when you are reporting the data in B2C section, you have to report state-wise, rate-wise. So when I'm adding the details, I am here in the state of Karnataka, which is like it is denoted by the on my PAN, you can see 29. So it is state of Karnataka. I will be selecting whichever the state which I am in. I will be entering the taxable value, and I will be selecting under 5%, whatever is the value, under 12%. I can keep adding. I will have to give rate wise, state wise. And when I am making any correction to the data, when I'm making any corrections to data, what is also very important is you are correcting table 7 data in your table 10. Amendments to B2C section is in table 10. You will be going to table 10, the B2C data you will be selecting. Here you will be selecting which year, which month data you want to edit. Like I'll be selecting 2021. I'll say March month data, and I will which state turnover you want to amend. So you will be selecting each thing and you will be amending state wise all the details that are entered. Let me pick that. Here, the only thing that you have to take care is, for some reason, assuming this is at 15,000 and let's say this is at 25,000. Number, whatever. While you are amending, what people make mistake is, I have reported 50,000 as against 60,000. They think since I have already reported 50, I will now report 10,000. So I am adding up. But answer is not that. What do you mean by amendment? Is like something you have written, so they, which was locked, they are unlocking it. You are going back and writing it. This is a common mistake people do. If this is what original data entry is there, that is what visible. People say, no, this 15,000 has to be 25,000. So I do not want to change this. So they remove the different items, whatever they have done the entry. They say, okay, this 15,000, either they will make it as 10,000 and thinking that they have done a data entry, already 15 entered now, 10 I am entering. Or other data, I do not want to make a change. They will just remove that and they will put this as 25,000. This is one common mistake. Again, ignorance. People make this. What is now happening? I am going back to the historical, those data which is there. I am changing it. So the amendment to B2C section is not delta. It is like you are changing, or you are saying this is what it has to be there in that period. So this is one common error that happens. So one has to be very careful of what are the changes that one is doing in your B2B or B2C section. All right. So with this, we have understood GSTR 1. So what is that you have to take care is reporting of the data at the appropriate places. Reporting of HSN information is mandatory. Rate-wise information is mandatory. intrastate, interstate segregation is mandatory. And the data is also coming from, if you have seen, let me show you, if you have seen, the data is also whenever you select this, even before you do a data entry, let me just go back, even before you do a data entry, let me go to the returns. Portal will automatically show that there's some data that exists. Where is that it is existing? If you have an e-invoice, it will say that the data is already there, e-invoice visible to you. Or if you are using e-bill, data from e-bill is already there. So portal will say, can I import the data from e-bill section? Since it is already some information is available, it will ask you to import the data. So you have the data from all the sources. Now let's move on to understanding GSTR 3B. GSTR 3B is a return. If you have to know the history, though it is not relevant, originally GSTR 3B was envisaged as only a temporary return, and wherever the GSTR 3 is deferred. The return filing process, the way it was envisaged is GSTR 1, which would be a statement of outward supply, would be there. This data which is there in the statement of outward supply will be visible to the recipient in GSTR 2A, and he has an option to make a correction, amendments, add, modify, delete, and finalize his GSTR 2. From GSTR 2, if some corrections are happening, it will be flowing back to the supplier in GSTR 1A. So between between first day to 10th day, GSTR 1 will be filed. On 11th, 2A will be visible. Between 11th to 15th, one will be finalizing their purchase returns, which is GSTR 2. Any corrections to GSTR 2 happens, the supplier has to take an action on 16th and 17th. A 2-day window would be provided, and after 1A is finalized, 18, 19, 20, GSTR 3 will be finalized. So it was a beautifully thought, very beautifully thought process, but while it was implementing, it failed. It failed for multiple reasons, not understanding the ground realities, how Indian systems are there. Today, everyone are used for this online filing returns, but way back then, the service tax returns used to be half yearly. Most VAT states do not have this concept of matching, so there was no tech savvy and everything. So owing to those challenges, they immediately dropped GSTR 2 and 3, and they said, let us have GSTR 3B. What is GSTR 3B? It is a simplified form of GSTR 3 and a mix of challan and tax payment. What the government said, okay, you enter your details, of liability and input tax credit. Both, you give me what is your liability and what is in your input tax credit. Give me the details. The difference between that is the tax to be paid. You pay it. Now, is there a connection between GSTR 3B with GSTR 1 or 2 or 2A? The answer was no, because the systems were evolving. Effective from beginning this year, portal has auto-populated saying that, okay, I will be basis your GSTR 1, I will fill your output. Basis your GSTR 2A, I will fill your input. You automatically offset your liability and file it. So let's understand my GSTR 1 liability. My liability will always be two parts. One, on account of my sales. Second, on account of my purchase. On account of purchase, how is the liability? I have already paid to the vendor. So there were some purchases which we have seen yesterday, that which will attract reverse charge. Maybe goods, maybe services. It will attract reverse charge. So instead of paying it to the vendor, I will be paying directly to the government. So I have to report all my liability. So the liability they have segregated into 5 sections in table 3. 31A is domestic taxable turnover. 31A is domestic taxable turnover. 31B is exports. 31B is exports. 31C is exempted turnover. 31C is exempted turnover. 31E is non-GST supplies. So the supplies on which GST is not leviable is 31E. So they are expecting you cover the entire P&L account and just report it here. You cover the entire P&L account and report it here. So what will you be reporting? You will be reporting turnover and the tax portion of it. You will be reporting the turnover and the tax portion of it. Next comes the reverse charge, which is 31D. So whatever is the total liability you have, it could be on account of import of services, it could be on account of purchase from an unregistered person or purchase from a specified dealer. So all this you will be reporting under 31D. So your liability under whatever that needs to be paid is captured in your table 3 or specifically 3.1. Then the input tax credit is divided into total inputs that you have to report. Total input you have to report. So table 4A will capture the gross input tax credit that you have. 4B is the input tax credit. 4B is the input tax credit that out of the gross input tax credit you are reversing is captured in 4B. How much is the net input tax credit you are availing is captured in 4C. Whatever is ineligible credit is captured in 4D. Now, if you look at this carefully, let me just show you. Here, there are two things in your from your GSTR 2A. Your input tax credit is a portion of it is there in your 4A, which is eligible and you are availing, and there is an input tax credit, a portion which you are not availing is there in your 4D. That portion of tax which you are not availing is there in 4D. So your total input tax credit, if I have to say, is your 4A plus 4D. I'm just coloring it for your easy reference. Your 4D plus your 4A. Your 4A plus 4D. This put together will be total input tax credit. Now, 4D is only a reporting input tax credit which you are not availing credit for. Now, let's understand what is that input tax credit which you are not availing and why you are not availing. Let's quickly understand the brief. Yeah.
I think better you give one example with figures so
Yeah,
that
I will explain it in the portal. I'll take it to the portal and I'll do a data entry and I'll show it.
Yes. Amount. Okay.
Amount, yes. So my total input tax credit has to be accounted for. Now something is eligible, something ineligible. Let's quickly understand. Yesterday we did not cover the provisions relating to input tax credit. We covered only supply. Let's quickly understand input tax credit and go back and see how we do the data entry. Firstly, input tax credit means credit of CGST, SGST, IGST, UTGST which is charged by the supplier. And it also includes import of goods. Why do they specifically have to say? Because IGST on import of goods is paid under Customs Act. So all that is included, and it also includes reverse charge. This input tax credit is generally divided into three categories. Inputs means input on goods, input services, and capital goods. Capital goods is something which is capitalized in the books. So you have to necessarily segregate your input tax credit into these three categories for multiple reasons. And one main reason is also for the purpose of refunds, because certain category of the credits will not be eligible for refunds. So segregation of input tax credit in your books of accounts into these three categories is also mandated by the law. When can you claim the input tax credit? For you to claim the input tax credit, there are conditions which are given in section 16 subsection 2. There are 4 conditions and 3 provisos. So first and foremost, for you to claim the input tax credit, you should have an invoice with you. Mere having an invoice is not sufficient, and all these conditions are not mutually exclusive. They are directly connected, so it is not any one is met. All have to be met for you to claim the credit. And under section 155, the burden is given on the assessee to prove that his credit is valid. So the first and foremost condition is you need to have an invoice. You should have received the goods, and the person who is selling to you, that person should have paid the taxes, so he should have filed his return. You are the one who is claiming the credit. You should record it as input tax credit and you should file the returns. Now, after filing the returns, after availing, government also said that you should pay to the supplier within 180 days. So within 180 days, if you are not paying, you should reverse the credit that you have availed. And this credit so availed should not be a blocked credit or a restricted credit under section 17. So if something is referred in section 17 as a credit not eligible, you should not take that credit. And if there is a credit which is commonly used, it should be reversed under rule 42 and 43. Lastly, such credit which you are taking should not exceed 5% of the credit that is visible in your GSTR 2A and 2B. Let's understand even those before we go to the portal. So the time limit, I can take this credit, like how I can correct my sales return. I can correct the sales return till the sales data entry, which is when I'm saying sales return, not the returns, I'm saying GSTR1 I can correct till September of next financial year. Likewise, if I have missed in taking any input tax credit, I can take that credit till September of next financial year. Now, these are the credits which the government said you are not eligible for. You are not eligible for. So there are three sections one should be remembering: 17 subsection 1, 2 and 5. So any credit, if you are purchasing for your home consumption, not for business purposes, do not take the credit because it's not put to use for business. Any credit that you have purchased for providing an exempt supply, do not take the credit. Since outward is not liable, why to take inward also? Inward is also not liable. The third is, even though it is for business purpose, even though it is for providing taxable purpose, government said do not take the credit. What are they? If you purchase a motor vehicle less than 13-seater capacity, a goods vehicle will not fit in because that's not for passenger. A passenger vehicle less than 13-seater capacity, do not take the credit. Okay, I will not take the motor vehicle. I will take rent a cab service. I will do hiring of a vehicle. Do not take the credit of it. Providing food and beverages to your staff, do not take the credit. You have purchased the goods, goods got stolen. So since they are not being sold, they are not put again into the business, do not take the credit. I have paid some taxes as penalty under section 74, do not take the credit. I have taken insurance policy, either health or life for my employees, do not take the credit. A general insurance policy is covered, but a health and a life insurance policy is not covered. If you are doing a construction activity, for your own self, so you are building a factory, either you are buying the raw materials and giving a labor contract and getting it built, or you have given full contract someone to build. In whatever be the situation, do not take the credit for it. A non-resident taxable person who is coming into India making a business temporarily, so he can do for 3 months. Whatever the goods he is bringing from outside India, he can take credit of it. But whatever he is procuring locally will not be any credit. After procuring the goods, again, if the goods have been taken by proprietor partner as a part of drawing, do not take the credits. So these credits are blocked. You are not eligible to take the credits if they have been given in any of these restricted criteria. So just to give you an understanding, any credit which is used for the taxable supply, purpose, you can take it. So it is used for an outward taxable supply, you take the credit. If it is used for exports, zero rated supply, you can take the credit. Any credit which is used for other than business, do not take the credit. It is disallowed. Any credit which is used for exempted purpose, again, do not take the credit. Now, it may so happen that some credit is commonly used, you do not know. Let me give you one simple classic example. I am a dealer. I am a provision shop dealer. Let's take a situation. I am selling rice, which is I'm a wholesale dealer of rice. What am I selling is rice, which is an exempt supply. And what is my input tax credit? I have taken that shop on rent. I am paying to my landlord every month, let's say 1 lakh rupee rent and 18,000 input tax credit on that. So 18,000, can I avail input tax credit? The answer is no, because my outward supply is exempt. So do not take the credit. It is fully disallowed. Contrary, I am a dealer, but I am selling sugar, which is taxable, which is fully taxable. So I am only selling sugar. I am paying a rent of 1 lakh rupee, 18,000 input tax credit. Can I take the input tax credit? Again, the answer is yes, 100% allowed. The problem that comes is I am using it for both taxable and exempt. So I am selling both rice. I am also selling sugar. I am selling rice, which is exempt, and I am selling sugar, which is taxable. Both are in the same premises. I am paying rent. How do I do? The government said apply rule 42. So in the ratio of your turnover of rice and sugar, split the input tax credit. So the way they have given is avail full input tax credit pertaining to the turnover of rice. Since you are not eligible, reverse it. So that is where your table 4B comes in. 4A is the credit that you have availed. 4B is the credit that you are reversing. It may be also a scenario where some credits are commonly used for business and other than business. Continuing the same example, even though I am using that shop only for sugar, but I have ground floor where I am selling the goods. First floor, I am actually renting it out and using it for my personal purpose. So I am paying the full building rent to the landlord, partly used for business, partly used for the thing. Again, under Rule 42, they said 5% deem it as disallowance. All common credits. So the credit that you are getting is segregated into these categories. Fully taxable, these are fully taxable, take it. These are fully not taxable, exempt or whatever, do not take it. And some credits are partly for it, partly for that, apply Rule 42. So you got to segregate the credits. That is, if you go to Rule 42, it appears to be a little complicated, T1, T2, T3, T4, but it's just simple. T1 is not used for business, T2 is for exempt purpose, T3 is 17 subsection 5, a blocked credit. Do not take the credit. Report these credits T1, T2, T3 directly to your 4D of GST or 3B because they are not eligible for. Then what is that you are eligible for? T4, which is wholly taxable. Take that credit. Beyond this, there is a common credit, C2. So those are the terms they have used. When you read plain, it looks confusing. So T4 plus C2 is what you are eligible for. Take it in your 4A. And out of this C2, the common credit, what is not eligible? D1 and D2. So portion pertaining to exempt. So you have to reverse it. You will be reporting in your 4B. So this is what the provisions relating to input tax credit availment. Now the next question that comes is, after doing this segregation, can I take the entire input tax credit? The answer is no. There is a concept of matching of ITC. Why does this come in? Because one of the condition under section 16(2) is supplier should have filed the returns, paid the taxes. Now how will I know? The filing and paying the returns, the government said, look at basis the portal. So portal says how much of the tax is matching. How much of the tax is matching. So if it is there in the portal, no action, you can directly take the credit. But it is not appearing. So then you have to reconcile and take it. So you can segregate the credits into 3 categories. Those which are appearing in the portal, those which are there only in the books and not in the portal, then those which are there in the portal and there but not matching. So the government said if there are no credits appearing in the portal, you take it whenever they appear. But however, there would be timing difference. What is this timing difference? Is you have to file the return by 11th. By mistake, you filed it on 12th. So it will be available to me only in the next month. So the government said under Rule 36 sub Rule 4, they said you can take additional 5% of the input tax credit, additional 5% of the input tax credit from the data that is visible, from the data that is visible. Now the question that came in, if I have to take this additional 5%, how do I determine additional 5%? So the additional 5%, they have given something called GSTR 2A and 2B. So with this, I'm introducing a new topic called 2A and 2B. What did I say? 2A is what we know that the purchases of mine or someone who have sold to me is showing. But the problem that came into the government is at what is the cutoff point? Like this, I have told you to take additional 5%, but how to correct it? Let me give you a simple practical example. Now, assuming you are an accountant, and you prepared all your, your sales liability, you made a sales for the month 1 lakh, and say, let's say you have made a purchases of 50,000 rupees, you are expecting a credit of 9,000 for it. Evening you have done a reconciliation, but on the portal what is visible is say 10,000 rupees only. So you can take credit of 10,000. Next day morning you have prepared everything and sent an email to the treasury saying that okay, 1 lakh is the sales, 10,000 is the purchase, the difference 90,000 into 18%. You have to pay it through cash. You have sent it to the treasury, they have prepared a check. So you are going to manager getting your check approved. Just for a review, so see, just to check whether you have done everything correctly or not. He opens the portal and he sees on the portal 50,000 will be visible. Like you'll be surprised, yesterday only I have seen it is 10,000. Today, how did it become 50,000? So there would be a time gap. The time at which you are finalizing versus the time at which you are filing, someone would have filled it. So the government said, now to avoid this confusion, let us put a timestamp. Let us put a timestamp. What is the timestamp? They have said that we will create an interim report or we will create an interim record called GSTR 2B. We will call interim record called GSTR 2B. If this is a time scale, and let us say this is the time scale, we are here in the month of June, we will be filing a return for the month of May. Now all my purchases which are coming here, so my suppliers who are filing the returns will be visible in my GSTR 2A. It will be visible in my GSTR 2A. And let us take, this is the cutoff date which is 20th June. This is the cutoff date which is 20th June. Now on 20th June, if I have to take the input tax credit, so the government said, let us create a cutoff date. Let us create a cutoff date, and let us say this cutoff date as 11th of June. 11th of June. So the government said, whatever the transactions of the May which someone is filing, it would be visible in your 2A. It will be visible in your 2A. But all those returns which have been filed till 11th June, only this much will be a smaller set. This is what will be visible in your GSTR 2B. This is what would be visible in GSTR 2B. So you don't need to be worried about the data that is periodically coming in. You will be taking a value up to this cutoff date, and you avail this as your input tax credit. This is what the government has said. Now you may be wondering what will happen. The purchases which are happening, purchases happen, but customers, the suppliers who are filing late,
this will be visible in your next month. This would be there in your next month to be. So you can take the input tax credit for it in the next month. So how much credit you can maximum avail for the month is whatever the value that is visible in your GSTR 2B, provided they are eligible credit, plus 5% of it is maximum credit that you can take a credit of. This is what you can take a credit of. That is what Rule 36 sub Rule 4 says. So 1 month's 2B value will be lower, another month 2B value will be higher. If you take a longer horizon, a larger scale, the value of 2A and 2B will match, but there would be an intermittent months where there would be a change. So 2A will be reported basis your invoice date or the reporting filing period, which is a dynamic statement. It keeps on changing as and when someone files, it will keep on changing. 2B is called a static statement. The very key differentiator between 2A and 2B, 2A is a dynamic statement, 2B is a static statement. I have given little more a detailed example for you to understand how the 2A and 2B data moves. Here is a simple example. Here is a simple example. Let us understand you are looking at a return period June 20. Return period June 20. Carefully pay attention. We are talking about a return period of June 20. Suppliers due date filing GSTR1 is 11th of July. Suppliers GSTR1 is 11th of July. I have 5 different suppliers. Supplier A, who files his return very diligently, he files in before 11th July. He has filed before 11th July. Now, all this information will be visible in my 2A. All this information will be visible in my 2A of June. 2A of June, irrespective when they have reported. Irrespective when they have reported, it is visible in my 2A June. But when it comes to 2B, since supplier A has reported on 11th July, so it will be there in my June 2B. Supplier C, he just delayed it. He missed the line. Instead of 11th, he filed it on 15th. Since he filed it on 15th, it will be there in July 2B. It will be there in my July 2B and not June 2B. But 2A, it will still be done. All these purchases will be visible in my June 2A. But the 2B, when he is filing, if you see, say, supplier B, who is a quarterly filer, he is filing on 31st October. Then it will be visible in my October 2B. A supplier D, who delayed his filing, he filed it on 1st December. Then it will be visible in my December 2B. So that is the difference between 2A and 2B. 2A will have the purchases for that period. 2B will have returns filed during that period, so that how much credit I can take it. So that is the major difference between 2A and 2B. People generally get confused. Your input tax credit is determined based on 2A. It's just that the quantum that you are eligible for is determined based on your GSTR 2B. There's a common question people ask: how do I take? What is that I should use? Should I use GSTR 2A or should I use GSTR 2B? Now, there is no straight answer to it. Let me walk you through what is there in 2A, 2B. Understand this, and we will go back to the return. Firstly, 2B has various sections, like how I have said input tax credit, which is there in 4A. It has various sections. What is my purchases from a registered person? How much credit coming from input service distributor? Whatever is the reverse charge purchases that are happening. Import of goods. This is populated from ICAI portal. So the moment you are importing a good, you will file your bill of entry. So the customs maintains the ICAI portal. From that, the data would be taken. And it is further segregated into eligible, ineligible. Now, when they are talking about eligible, ineligible, here they are not talking about 17 at all, section 17 at all. If someone is filing a document very late, that is July 2017, hypothetically, if someone has not filed July GSTR 1, who is filing now? Can it be filed? Of course, it can be filed for a period of 5 years. If the registration is active, it can be filed. Now we recently got an amnesty scheme also. One can file it. The moment they file it, it would be visible in 2B as ineligible. You cannot take the credit, is what it says. And there are other things, the place of supply doesn't match. So that's how it would be written. So it will be segregated and consolidated. You click on expand, it just gives you a very detailed section. What is the issue in my 2A? Why I cannot use 2A? Why I have to use 2B? For the purpose of availing credit, you will use 2B. For reconciling books of accounts, most of the people use 2A because that month purchases in the books and that month 2A in the books. It is easy to compare. So they use 2A for the purpose of reconciling with books of accounts. Let's see what are the issues in 2A. Firstly, it's a dynamic report. It also has all inward supplies, ISD, TDS, TCS, import of goods. It also has all the information. But the problem is you firstly do not have any line-wise information to compare with the books of accounts. Every time you download, it will be changing. So it will not be a static information. You have to reconcile every time you are doing a reconciliation, you have to download this data. Now, how do government derive 2A and 2B? The government excludes the wherever the supplier has entered it in GSTR1, it will be coming in 2A, but the status showing as not applicable. We will download one GSTR 2A, we will see all the fields, what are the information that is there. Let's just download one 2A and one 2B and look at all the information. Then see how one has to prepare a reconciliation summary. Let me go back to the portal again. Returns dashboard. Let me pick the March month. Now we have seen GSTR1. Let us see GSTR 2A and 2B. So it has various sections, various information. You can download this as a CSV. You can download the documents it into a CSV. Let me just open that file. Yeah. So you will be seeing the information in this manner. I will just explain you what is that it will be showing. Each invoice will be reported. If you are wondering why it is coming 2 times, because you have a line level information. So that's why it is coming. So you have the supplier GSTN ID, which is a self-explanatory. Let me just zoom it for the ease of understanding. So you have supplier GSTN ID, then there is an invoice number. The invoice type, whether it is a regular invoice or a reverse charge invoice, all those details are there. What is the date of invoice? Now you can find all these date of invoices are in the month of March. However, there is 1 January, someone would have made an amendment or entered it late. Then what is the invoice value? What is the place of supply? I have downloaded here. I am a registered person in Karnataka. 99% of the purchases would be showing place of supply as Karnataka. If the place of supply is not the location of the recipient, I am here in Karnataka, if that is not the thing, then it would be showing as an ineligible credit in GSTR 2B. Does a supply attract reverse charge? It says no. It means that I have purchased the goods, I have paid the taxes to the supplier. He is the one who is paying the taxes to the government. What is the rate of tax? What is a taxable value? Whether there is an IGST, CGST, SGST. People also just get confused. If there is an IGST, how can there be a place of supply still Karnataka? It is because the recipient state is 37. It is not 29. If my supplier is in 20, here the supplier is 37, I am the recipient, I am in 29. That is why it is IGST. Still the place of supply would be Karnataka. Place of supply is generally location of recipient. Now, after the tax, here comes very important information, whether supplier has filed the return or not, Now, if the supplier has not filed the return, why is it showing up here? The answer to it is there is a time gap. The moment someone is doing a data entry in GSTR1, it is on a near real-time basis. It is visible in GSTR2A. So the supplier has entered the data, saved it. It is in the draft mode. Only when he files, it will be status as said as Y. So here, if you see, let me just filter for the no cases. So this particular supplier, he has done the GSTR1 data entry. He has not filed his GSTR1 till date because I've just downloaded. So he has not filed it. Maybe he is in a quarterly or he had put it in a different period. Now, along with this, you also have GSTR 3B status. Now, it may so happen that some are a QRMP scheme holder, meaning first 2 months they are filing IFF. 3B they will be filing after little late. And we also know for the month of March, April, May, we have got these relaxations, so the filing date can be further extended. So the portal will say whether 3B is filed or not. So it can so happen that people can file GSTR1 but GSTR3B not filed, or vice versa. So the portal will be showing here is, if you see, the GSTR1 is filed, 3B was not filed. In an earlier case, if you have noticed, GSTR1 was not filed, GSTR3B was filed. Now, this is another common mistake people do is they do all the data entry, they forget to file it. Now you may say that, how is it possible? Anything is possible. So people also do it. And if there are any amendments made, that would be reported, because whenever an invoice is amended, you should only pick the amended invoice, not the original invoice. Here is the second point for you to understand difference between 2A and 2B. In GSTR 2B, since it is a cutoff date, there is a positive figure and a negative figure. How does the positive and negative comes? Let's take another simple example. So for the month of March 21, so I have made a purchase. I have made a purchase. Taxable value is 1 lakh, and the tax amount is 18%, 18,000 rupees. All right. So the supplier, let's say supplier filed on 15, let us take it a very straight case. Let us say supplier filed his on 10th April. He filed his GSTR 1. Now, where would this be visible? In which month? GSTR 2A and 2B. So the 2A, it would be visible in the month of March 21. Even 2B will be visible in the month of March 21. And the value will be reported as 18,000, 18,000. If the supplier filed on 10th April. Now, if the supplier, let us say hypothetically, he has filed on, supplier has filed on 15th April, then also it will be visible in 2A of March, but when it comes to 2B, it will be visible in April 2B, since he has filed delayed. Now, let us take this scenario that the goods are returned. Goods got returned in May 21. Goods got returned in May 21. Now what happens is, since I have returned the goods, I will issue the credit note. But imagine a situation where I did not even order. There's a mistake that happened. Imagine a situation where this is a wrong data entry. It could be a wrong data entry, or let us say let us give a simple example, wrong data entry. Now, instead of reporting, this is the actual data. This is what the actual it is. Let us see what is reported in portal. Let's say for the purpose of reporting in portal, the accountant has made a mistake. And he reported in this way. In the portal, so instead of reporting it as 1 lakh, in the portal he has reported it as 10 lakhs. In the portal he has reported as 10 lakhs. A mistake data entry. When did he correct? So he corrected in, say, May 21. He corrected in, and let's put a date as after filing April return, on 5th May 21 he has corrected. Now what will happen in my GSTR 2A? In my GSTR 2A, it will show in my March return. It will be showing, assuming there are no other purchases. Let us say there are no other purchases. In the month of March, my 2B was showing 1,80,000, saying that I can take the credit. So in the, when it comes to April 21, my GSTR 2A, we have seen that there is a field which will show, that is there any amendment which has happened in tax period, which tax period that has amended, and how much it got amended to. So now what will happen is, in the month of April, in the month of April, my 2B will show a negative value, saying that, okay, you have taken so much credit, but someone has reversed or adjusted. So it will be showing a negative value in my GSTR 2B. Since you have already taken so much 1,80,000, now you have to reverse 1,62,000. So indicating the net credit that you are eligible to take is only 18,000. So while one reading GSTR 2B, there are some positive figures, there are negative figures. So people also have to understand why a figure comes as positive, why a figure comes as negative. I hope you have some clarity on 2A and 2B. I have actually given what are the various screens that are there in 2A and 2B. Okay, but let us go back to the portal and see. So we have seen 2A here. Let's go to 2B for the same period. Let us download the GSTR 2B. And here it will also show when which is the GSTR1 they have filed all that information. If it is coming from e-invoice, the e-invoice related details will be showing as IRN. Now let me go to GSTR. We have downloaded GSTR 2A. Let's download GSTR 2B for the month of March. This is one other problem. When the moment you click here, it will say please wait for 15 minutes. So since I have already downloaded, it will be showing the downloaded version. So every time when you download, you will have to wait. Yeah. So here is GSTR 2B. Let's open the file. So it is telling the basic information about various headers, what does it mean, all those things. I would recommend students, if you can get an access of any one client data, you can just download the file and see what are the headers, why it is there, what is there. So it talks about ITC that is available, ITC that is not available. And when I said ITC not available means place of supply is from a different, not from your state, or if it is the person who has filed the return, July 17 is being filed now, or there is a credit note. When there is a credit note, I have to reduce my ITC. This much ITC is not available. So it segregates all the credit. ITC that is available doesn't mean that it is eligible ITC. That much is available. You check whether 17 subsection 1, 2, 5, you check at your end and you have to report it. When it comes to the B2B section, you will have invoice wise, line item wise reporting of the credits. Now this credits may or may not match with the credit values that are there in your GSTR 2A. If you look at it, what is the basis of the data that is coming here is the GSTR 1 filing date. GSTR 1 filing date. So let's look, apply a filter and see what is the filing date here. I have downloaded the data for the month of March. So for the month of March, my GSTR filing date, sorry, let me just freeze. Look at this, the data that is filed. So you can see the data that is flowing from, this is, we are talking about March thing. So starting from 13th of April till, starting from 13th of March till 11th of 13th of April, because earlier it was 11th. So after IFF they have taken the cutoff date. So till ideally say 11th of April, you will find the dates. You will not find any date between say someone who is filing on 14th April, 15th April, 16th April. You will not be finding that information. You will be finding that information, all the returns that has been filed in this period. Now, did they file the return for the month of March? Answer is no. What return they have filed, you can see most filed March return, but someone has filed December return now. February return has been filed now. June return has been, all the previous years data has been filed. So any returns that have been filed in this period, that data would be visible here as the credit that is visible, which is there in your GSTR 2B. So that is how you are segregated between GSTR 2A and 2B. I hope you got a clarity between 2A and 2B. Now, before you file your return, which is GSTR 3B, what is the reconciliation that you have to do? The reconciliation that you have to do, there is some value which is there in the portal. Let's say X. There is some value which is there in the portal. Same like your bank reconciliation, you have to segregate. You have to reconcile. How much of this is matching with my books of accounts? So there are like 100 line entries, of which 60 is matched. Park it at one place. Now that 60 might have some differences, but at least 60 line items exist. Then there are 40 line items which is there in the portal, not there with you. So you keep it in one section. Then there would be some 20 line items in which is there in the books, not there in the portal. You add it. So you can do a derivation. You can do a derivation between the data which is there in the portal and the data which is there in the books. There is no order in which you have to do. So what is the action point that you have to do? So once you have that information with you, the moment you have the information, the action that you have to take, that there is some credits which are there only in books. So if something which is there is only in the books, you have to follow up with the vendor saying that, okay, you have made a sale to me, but it is not there. Then there would be a situation where that data is only in the portal. Data is there only in the portal. So you have to check up with internally that, okay, did the goods have come? Where is this invoice? Why did it has not come for accounting? Why is that? So you have to check it internally. Now there would be a scenario where some partially matched. So it is those fully matched can be a different place. Something is partially matched. My books is showing 100, but he has reported as 110. So maybe some discount agreed, whatever. So you have to do a reconciliation for any data entry errors that happening. All those needs to be corrected. So this is how one have to do the corrections. Now, once you make all these corrections, you have a clarity of what you have to file. That is where you will go back to your GSTR 3B in filing your the GSTR 3B return and finalize your input tax credit. How much of the input tax credit you will be taking, like what is available, what is available. Let's now look at GSTR 3B on the portal. On the portal, let's see GSTR 3B. How does it look like? Let's say for the month of May, I'm going here. GSTR 3B, it gives the due date. The due date is generally 20th of the month. Please note the due dates change time to time. You should always refer to the latest notifications. And between some states, there is a 20, another some set of states there is 22. You need to be very clear about it. So do you want to file a nil return? If I say yes, it will just go and submit. I'll say no, I don't want to file any nil return. I have some data to be filled. It is just giving me an indication that, okay, GSTR 1 is not filed. So the data from 1 is not auto-populated. So nothing is generated. So it's just giving what I need to do an advisory. I said, that's okay, fine. I know I have not filed it. Now here comes the data, what we need to file. We have seen two sections. We have seen there is a liability. So in table 3.1, table 3.1, there is a liability which is on account of my output and reverse charge. Let's see how it would look like in the portal. So in my 3.1, I just need to do a data entry. I need to do a data entry of, and by the way, this is one common habit we have. Let me just go back. One common habit we have, whenever something pops up, we just want to, okay, cancel, do it. Don't do it. Just watch it. Know, at least for the first time, you listen and understand what it is trying to say. The GSTR 3B is very critical, especially when it comes to the compliance. Those who are filing refund with payment of tax, exports or supply to SEZ with payment of tax. The refund is automated for goods, but it will be automated only when your value in your GSTR1, value in your SBN shipping bill, and the value in GSTR 3B matches. The refund is automatic. Otherwise, it is not automatic. Then you will be getting an error SBN, the SBN 01, 02, 03. Each error code denotes something. Very critical. So you also need to sometimes read, understand what value has to be reported where and what does it is trying to explain. Yeah. So here is other than zero rated. Other than zero rated, you will be reporting here. Now, if I have to correlate from your GSTR1, what is the value I'll be reporting here? I'll be reporting from table 4. I'll be reporting from table 5. And in 6A, which is exports, 6B is supply to SEZ, I don't report it. And I'll report 6C. Okay, I cannot type it, but I'm just saying. Then what will I report? I'll report table 7, which is B2C supplies. I might have issued debit notes, credit notes relating to 2. I'll be reporting a part of it from table 9. Then I would have made some amendments. So the amendments are there in table 10. I'll be using that table. And I will also be paying some taxes on advances. So I'll be reporting from table 11. So please don't see this as a value. From different tables is what I'll be reporting here. Segregating how much is IGST, CGST, SGST, I'll be reporting it here. And when it comes to zero rated, we know 6A is exports, 6B is supply to SEZ. Then table 8, the nil rated and exempt you will be reporting. 8 has 3 sections: nil, exempt, non-GST. Nil and exempt will be reported here, and non-GST will be reported in E. Then comes reverse charge. This has got nothing to do with GSTR1. So this has got nothing to do with GSTR1. You will be assessing from your books of accounts how much needs to be paid. You will be reporting it here. Then going back to another important table. There are other tables. Definitely they are important, but basically 3.2 is summation out of 3.1. How much is B2C interstate composition and UN holders? This is purely for the GST and portal to do an allocation of the tax payments and segregating, giving it to the states till the reconciliation happens. A more important table is table 4. The 4 has 4 sections. 4A is gross ITC that is available. 4B is ITC that is reversed. 4C is net ITC that is available. 4D is ineligible credit. I'm hoping that you are making some notes. As mentioned in yesterday, it is very important. Like every time when something happens or when session happens, I always carry my notebook, a pen with me. Make notes. The 2 advantages while you are making notes is, firstly, you are catching your attention. It's like you are here and you are not into your dream world. Second, some important points when you are making note of it, it's like as you are writing into your mind. So you will be definitely remembering some points. So make notes. It would be easy for you to ask questions also. We will be taking up a Q&A session tomorrow. So we will be taking that. So your 4A is segregated into 5 subtables. Your 4A is segregated into 5 subtables. 4A1 is import of goods. Whenever you are importing the goods, it is visible in ICAI portal. You will be reporting here. 4A2 is import of service. You have to write manually this much is the import of service, and you have to report. This is the reverse charge liability. 4A3, whatever is the domestic purchases that you are doing owing to 9 subsection 3 or 9 subsection 4, taxes that needs to be paid will be reported in 4A3. Please note the value that you are reporting in your 4A2 and 4A3. This is a reverse charge liability you are making the payment. So this should be matching with the value that you are reporting here in your table 3.1. In your table 3.1 as 31D, the 1D, what you are saying inward supplies liable to the reverse charge, whatever the value that you report here, it should match. It should match. Now, there are people who ask a question that can it be in the same month? Yes, in the same month you can pay the taxes, and in the same month you can avail the input tax credit. Absolutely no issue. It's just that the liability that is reported has to be paid in cash. There's no way you cannot pay it in credit. Hypothetically, in this month I do not have any sales and purchase. I only have some reverse charge liability of 100 rupees. So I'll be reporting 100 rupees in my liability section. I'll be reporting ITC in my ITC section. When it comes to payment of tax offset, I cannot use this ITC to pay reverse charge liability. I have to necessarily pay that in my cash and carry forward this 100 for a future month for offsetting the liability. Next, 4A4, inward supplies from ISD. ISD is a concept under GST wherein there could be a situation of common credits. There could be a situation of common credits which is received at the head office. And another example, we can take our own audit example. Let's say I am doing an audit of Infosys. Infosys has its presence across India, but head office is here in Bangalore. I have done the audit of their Bhubaneswar center, Calcutta center, Delhi center, whatever, all areas I have, all the states I have done the audit, but I have given one audit bill. Now, the audit bill ideally needs to be apportioned. Instead of they asking me to give one bill there and there, here and there, they can create a central pool, and these purchases which are common to all the states, it has to be segregated through ISD. It cannot be a cross charge because they are not providing any audit services. So they split the credits based on a turnover ratio, and they file GSTR 6. So that data will also come automatically here. Then comes all other ITC. This is even though this is miscellaneous, and that is what we say last but not least, this is the highest priority. All your purchases which is visible in your 2A and 2B is which is matched and checked here. Now, please note, this is your gross input tax credit. Does it mean that all my purchases reside here? The answer is no. There are purchases which you do, which are not eligible. So there are purchases which are not eligible. So the eligible portion comes here, ineligible portion comes here. Your 4A plus 4D will be the total input tax credit. So if my total input tax credit during the year is 100, so eligible portion 80 I will be reporting here. Ineligible portion 20 I will be reporting here. 20 I will be reporting here. With this, the total 100 will be reconciled with my GSTR 2A or 2B. That is how one have to reconcile. Now, out of 80, I said that of that C2, there is a D1, D2 common credit reversal. So some 5 rupees is not eligible. I will be reporting here. Or someone has issued a credit note. I made a purchases in the last month. I have made a purchases of say 10 rupees in the last month. They have reported I have availed the credit. This month they have issued a credit note. That credit note 10 rupees I will be entering here. So what is my net input tax credit I am taking is here. This is my net input tax credit that I am availing. So that would be represented in my 4C. The net input tax credit that I am availing will be represented in 4C. With this, I will be finalizing my both turnover and the input tax credit. After the turnover and input tax credit is finalized, what I need to do is offset liability and make payment of taxes. So I will be going to the next tab, which is there in my GSTR 3B. I have entered my 3.1 and input tax credit. So like associated with my GSTR, associated with my turnover, a portion of my supplies for a GSTN purpose allocating between IGST between the states, they have asked this. Likewise, whatever is my total purchases where the ITC is there, I will be reporting here. And those purchases where I do not have an ITC, I will be reporting here. To match with your P&L, your purchases side, your table 4 plus table 5, if you add up, you will be getting all line items of your P&L. Like how you will take your table 3.1, all your credit side of the P&L, so that you know that whether you are tracking all your line items or not. So it is a facility for you to internally maintain. Now let's go to the last section of table GST 3B, which is payment of tax, interest, late fees, and payment of tax. Once this is filled, you can proceed for making payment. Proceed making payment. Here comes the government gives what are all the liabilities that you have entered. What are the liabilities that you have entered? It will be coming here. So total liability that needs to be paid other than reverse charge tax payable, which can be paid through ITC. And whatever is the reverse charge, that has to be paid only through cash. Other than reverse charge can be paid through ITC, and whatever is reverse charge has to be paid in cash only. So you can, there is section 49 subsection 5. There is an order in which you can utilize, the order of utilization and manner of utilization is given under section 49. IGST can be used. First, it has to be used for offsetting IGST liabilities. After that, if you still have an IGST ITC, you can use it for CGST or SGST in whatever be the order, so that you can make good of the taxes. But when it comes to CGST, you have to use it for CGST, and if you have some balance, you can use it for IGST liability. But CGST cannot be used for SGST liability. Vice versa, SGST ITC cannot be used for CGST liability. So there is an order of utilization in the manner in which you have to use has been given. After you fill all the information, it will be arriving the balance which is required. What is the balance in cash it will be taking, and if something needs to be paid, it can directly say, okay, create a challan, and we say the challan as PMT06. Under GST, every document is named. Like to file an appeal, you'll be filing APL01. Like you are filing, making a payment of demand which has come, you will be using DRC03. Likewise, every document has a thing. So here you will be using PMT06. You will fill the amounts, and portal can give you the auto-filled basis from GSTR 3B. You will come here and make the payment of taxes. So friends, with that, we have come to understanding GSTR 3B. Just let me summarize. So upon filing your GSTR1, the outward data would be auto-populated from GSTR1 into table 3. And once the GSTR2B is generated, even the ITC would be auto-populated into table 4A5. If you have some additional liability, you can change it. You can change your values in 3B and change it. If the change is beyond 5%, it will be showing in red. Showing in red doesn't mean that it is something wrong. It is just an indicating to the proper officer for assessment, is there something wrong, or for you to check, is there something wrong. And if you feel that you have made an error in GSTR1, you can correct only in the next month, or any of those things, you can go ahead and make a changes in GSTR 3B, including adding a liability, reducing a liability, adding ITC, reducing ITC. You can do all of that. And once the taxes have been paid and you have offset, you can go ahead and file your return. So this is what we have to cover in day 1 and day 2 about the returns. But there is something which you should be knowing. We have completed input tax credit. There is something which you should be knowing about the quality of reporting. There's a quality of reporting, and why you should be reporting and doing this in most correct and accurate manner. So there is a very much importance under GST for the compliances. These compliances are very critical and very important. Before I go here, Rajesh sir, anything you want to add, or you want to take it from here?
I think Venu, you covered all the aspects. If possibly, if there is a possibility of we giving any document with a screenshot sharing tomorrow for the general circulation, tomorrow we can think of it. We'll discuss about that step by step portion if there's anything which we can think of. Okay.
So the material that would be shared, we will take the screenshots and put it so that they get a view of it. It would become a comprehensive document.
Yeah, so that they can use it for a future reference per se. Otherwise, nothing per se to add till now, because it is merely, as you rightly explained. However, a couple of points I would like to add for the consumption of all the participants is that we did mention at a couple of places, you have to look at this, you have to be aware of this provision, etc. It is found, especially for example, the block credit under section 17(5), the input tax credit. But if you really see, there may be a tendency, unless there are articles who are required to study for the exams, they may not look at the statutory provision. But what I request the participants, it's just section 16, 17, 18 with maybe another 5-6 rules over there. If you read at least once through that, it will not take more than half an hour, but it gives you a concrete idea. Before you go for filing the returns, it will be easier for you to comprehend what you are filing, why you are filing, what information you are filing is for what purpose. So you'll understand the context. That is what is very much required being a professional, not merely following the process and procedures alone blindly. Just whenever any person says anything about this procedure, just ask a question: what is the origin, or what is the statutory provision, what is the corresponding rules to this forum? If you are able to look at it, you can understand any form, any procedure better. So this is one suggestion I thought I should tell. In fact, various other questions which are there will address. In fact, why we had to ask for one more day, because when we saw the questions, we got around 170 questions we got, and today also we are expecting much more. So it will not be a justifiable for us to rush and answer your questions hurriedly without you understanding that. In fact, many of the points which you would have told yesterday and today, maybe it will get a more clarity when we take the questions and answer with examples. So that's what we have taken one more day additionally. Probably I hope that you will not be disturbed with your routine things. Nothing will pile up. Please take a time out and please attend the program even for tomorrow also between 11 to 1, where many of these concepts will be clear. Even some of the aspects which you are not clear today, or if you have any doubt or you are understood but you want furthermore clarity, we request you to kindly post your questions in the question and answer section so that we will compile it. Before we come tomorrow, we will not read out that, we would have come prepared with the answers and we explain the concept and answer those questions. I think that would be fine, Venu. Yeah. Yes. I think you can proceed further, Venu.
Yeah. So moving on to the last part of the discussion for the day is what else you should be knowing about compliances is, firstly, these compliances are very much important. Reason: the cost of non-compliance is very high in GST. There has been recently an amnesty scheme brought in for delayed filing, late filing. If you file a return late, the standard late fees which is given in the Act is ₹100. And when you say 100 in CGST, 100 in SGST Act, 200 rupees. 10 days you did not file a return is 200 into 10, 2000 rupees. So later they reduced it, saying that okay, instead of 100 we will make 25 50 rupees. A 10 days delay is 500 rupees. And I have mentioned in the earlier, when we have downloaded GSTR 2A, 2B, we have seen there were situations where 1 was filed, 3B was not filed, 3B filed, 1 was not filed. These are common instances where people forget. They did a data entry, everything is done, submitted. DSC was not there. It would have been intimated to someone that please office DSC and file. Mail was not read. COVID, someone is not reachable, whatever. The cost of non-compliance and the GST is very high owing to the late fee. Not just late fee. Till you file, it is deemed that you have not paid the taxes. Even you have to pay it along with the interest. Interest is 18%. And we know that the bank rates have substantially has reduced. Today, the bank finance, we get anything between 10 to 15%. So this interest rate is much higher than the credit outside available outside. So if I do not have any working capital, it is better I borrow and pay the taxes rather than paying at 18% in the next month. So it is better you comply. And next thing, if you do not comply it correctly, there is a general penalty of 10,000 CGST, 10,000 SGST. You are filing a classic example. Table 3.2 is generally not filled properly. So government has issued a circular. If you are not filing table 3.2 or a table 5, let us levy a penalty of 25,000 rupees. So the government has a power to levy penalty up to 25,000 rupees. So they have said that it is creating hassle for the government to segregate the taxes that needs to be split between the states and center. Now hassle is there. You may say owing to that, why should common man suffer? But unfortunately in the form itself they have said that you should fill. So you are not filling what you have been asked to do. So whenever you do not comply with the provisions of the law, that compliance, the cost is very high. Next, the directors are a straight risk. Whatever the value which is reported in GSTR1 deemed as a liability and liability is not paid, so there are penalty provisions for directors also, or sometimes they would be arrested. And today the government is blocking the portal, your e-waybill portal. You did not file the returns in 2 months, your portal is blocked. So you will be having another issue that okay, you are unable to conduct your business. Now, most of the banks are integrated with the GST portal. So you are submitting your working capital statement, your lending statement, those have been linked. So it will be affecting your bank funding, not just funding, it will be affecting your rating also. Generally, if you see any credit rating agencies, they will watch this very carefully that, okay, what is the timely filing of it? Credit rating agencies will watch, or you are asking your investors, you are submitting monthly data, they will want to always be free that whatever the statutory liabilities have it been paid or not. Like the due diligence is what they will first look for it. And the data is shared between one department to other department, between CBIC and CBDT. So in your 26 years, you will be seeing the data of GSTR 3B, or in your GSTR 3B, in GST portal, you will be seeing the data of income tax. Now, you are complied with one law, you have not complied with another law, you will have a problem. So compliance under law is very important. Now, knowing that the compliance is very important and why people are not complying. So there are some challenges for complying this. What are the challenges? Like, let's look at on the ground, what is the reality? The reality is the lack of knowledge. Most of the people, they have, when the GST was implemented, what they thought GST means. Earlier, I was putting VAT as 14.5%, 15.5%. Instead of that, I will put, okay, now CGST 6%, SGST 6%. That's all. Or instead of filing VAT 100, now I am filing GSTR1, GST3. Okay, I understood. Okay, so which means is like without mere attending some session for half an hour or understanding one WhatsApp message, people think that okay, they are at the helm of everything and they know everything. The things are changing. So there is people lack knowledge, that is an issue. then most of the organizations have a resource which use multiple things. So they do not pay attention to one area. So again, whenever anything you don't pay attention, that doesn't get transformed. So you will continue to make same mistakes which you are doing. Then while doing internal audit, we like most of the article students, that's where I was like very happy when Vijay Kumar sir was mentioning that you really needs to extend your scope, understand what is that you are doing, look at your audience, what is that you are presenting, you are conducting the work on behalf of your principal. Just keep your eyes, things, everything open. Person who is doing GST return filing, he doesn't go and check, okay, what is, and previous month someone has filed, it is not my duty. Some data has come, I have dumped and filed. Do a work end to end. Verify the data. When I say internal audit, you audit whatever you are filing, that is what you have to do. The workings are done based in Excel. And Excel is like a pen and paper. Excel is like a pen and paper. You do one data entry, like shift select, control minus, it's gone. And I opened like today, now you saw, I opened one file, another file, a third file. There are situations I have noticed that an article student, instead of filing the like say my return has to be filed, okay, my login is open, but while copying pasting the data from the Excel, Rajesh sir, the sales data has been uploaded by mistake. And will portal say no to it? It won't, because instead of my customers, his customers have been entered. People make mistakes. So better be careful whenever you are using with Excel. Then these desktop based softwares that are used, the problem, another thing is like, say let's say we are in lockdown, so that application cannot be used. What do we do? We send the data over email to someone, they just again sync the data. Now while doing that process, most of the time you really do not know what happened. Like we are very much in hurry, something pops up, we say okay and next. So say IFF has to be submitted. You did not submit IFF month 1, month 2. Month 3, when you are filing GSTR1, okay, anyhow, I have submitted. So third month, I am only reporting GSTR1 of the March month, without even knowing that, okay, there are 2 months data which is missing. So it's like, that's what you saw. People have done a data entry, they have not submitted. Either don't do data entry and do it everything here. So have some clarity. All these applications have a facility to copy the data, import the data, and submit it. So whenever you are using this desktop based software, pay very much attention to what is the source of the data where that are coming up. What is that you can do to improve yourself, to upgrade yourself? First and foremost, I have said that there are various ways of reporting of the information. So you have a track that which are all the returns to be filed, what are the due dates, whether the returns have been filed or not. Prepare a tracker. Should there be a software for it? Something as simple as a notebook. You just write it. In fact, that our calendar we used to maintain. Okay, as a student you used to say, okay, Sunday, this date to this date I have this work. You can just say this month I have to file so many clients, on this date I have to file. Once it is filed, just put a tick mark, like a register, Excel, Google Sheet, something. Prepare a compliance dashboard. What needs to be done, whether it is done or not. Include GST in your internal audit works, or while you are filing, you use the internal audit techniques, whether the data you are filing or not. Just before you file, put a graph of sales, purchase, ITC, payment in cash. That itself indicates whether you are doing it right or not. You get a satisfaction that yes, everything is right, and you can go ahead and do it. Next, if there is a delay in accounting, how do you know there is a delay in accounting? Like when you do a reconciliation between 2A and the books, I have said there are missing things. You can start focusing or advising that these are the things which are not recorded on a timely manner. And when a data is not recorded on a timely manner, it creates an hassle for filing of the returns also. Either returns go late, and anything that is happening in late, you are making in a hurry and mistakes happen. So make sure you do accounting on a timely manner. Prepare a strong MIS. Every management, you should advise that there should be an MIS. Wherever possible, you can move to a cloud application. More importantly, attend periodical training, including you. You have attended here. Like, you make sure you put a calendar for yourself. Every subject, not just GST, every subject you need to have a periodical training. Those who are in the process of, say, I am doing filing of returns, let me get latest update. Okay, what is that, the change that has happened in the notification? What do I have to take care in the filing? Whenever a notice comes, have your details ready. Most of you would have looked at ASMT 10. I filed so much in my GSTR 3B as input tax credit. Government has sent a statement saying that the input tax credit available in 2A and 2B is only so much. Why you have taken extra credit? Possibly you are a very compliant taxpayer. You are a very compliant taxpayer. You didn't want to take a credit unless it is visible. So you did not take any credit, say April, May, June, July. Then everything is reconciled. In the month of August, you are taking it. But August, the credits actually there in 2A or 2B is very less, but you have taken much more. So there is a historical credit, missed out credit you are taking. Something could have happened, but have a proper working and reply to the notices. Lastly, make sure that you train your peers. So the biggest knowledge that you get is when, like, even between me and Rajesh sir, as we look at your questions, whatever the questions that you have written, as we are reading the questions, maybe we will go back to the reference of the rules, circular notification, and say, okay, this is basis this, we are saying that it has to be taxed, it has to be exempt, all those things. So make sure that you improve your knowledge by creating your own clone, by saying that, okay, if this is the data comes, this is what you have to come, you have to explain. That's why yesterday Vijay Kumar sir was mentioning, you are working with the peers. In first year, you are working with a senior. When you are in third year, you are working with a junior. So you make sure that you create a sufficient training ground amongst you, so that the compliances are happening a smoother way. So these are what all I want to communicate for ensuring your proficiency is improved. And as Rajesh sir mentioned, the presentation would be shared with all the screenshots and everything. Rajesh sir, anything you want to add before we conclude for the day?
I think to briefly summarize, as well as some pointers to all the participants, would be as we discussed a lot of things about the overview of the GST in the beginning. Then we discussed about GSTR 1 return filing. Then we discussed about GSTR 3B along with ITC related provisions. Now lot of information is fed. Now the question for the participants would be, sir, now from where to start, how to proceed, and where to conclude? This may be the questions which will be running in your minds. So I can only give a probably what I would look at it, maybe useful for you all. First point, all the SSCs will not have all the complications, all the provisions which is applicable under the GST law. So only certain provisions will be applicable to certain SSCs. So therefore, for each of the SSC, you may have to prepare a master data sheet and a checklist or a audit plan or a work plan for that in a one file, so that you take that flow and do it, where you ensure essentially take a client, what is his business, what are all the provisions in the GST law which we speaking about are applicable, because we discussed about composition dealer, non-composition dealer, having multiple registration, one registration. So depending upon that particular SSC, what is that which would be relevant to him while filing the returns or while compiling the returns or verifying the returns, because you may be involved either in preparation or verification or compiling the data and preparation or only compilation. Whatever the work you are doing, list out the points to be kept in mind or points you should check so that you don't forget, because memory can give you, may not come your way all the time. So ensure that you prepare a checklist, sort of important aspects to be looked into in each of the returns. And in any of those lists, the first question for every month you ask that client, is there any change of business? Is there any change of activity? Because you would have done previous month, simply go ask the same data and you compile the returns and file it. Later on, you might miss out some new thing which he has added you have not at all considered. So first ask for anything which has changed from the previous period to the current period, and if so, how it is to be dealt with. You need to add it into your checklist or the audit file and take the things forward from there. So this is one thing which is very important, because if you, the chances of you missing will come down substantially. Second point, the GST law is very, very dynamic. Every day there are new notification, new changes. Probably you may, among your group or within the same office, or a couple of friends among your wherever, through whatever the things, or any through your professional friends, whoever it is, create a group for discussion or updation, where many of us, even may know us, many of them, we ourselves don't go and log in and see the notification or circular or case laws. Since we are a part of couple of professional groups, we get updates so that it is there in our mind. Sometimes when such issue comes up, we'll be able to recall that and go back and see or check that aspect and implement it. So essentially, don't be working in isolation, be working in group. As Venu was clearly mentioning, be sharing the knowledge with the peers is going to help you a lot. So always be updated whenever you are taking the work to the next level. And I think what we did not cover, which may be relevant or which may be asked by you, is the annual returns and the 9C. We did not go into details of it. Essentially, I think to sum up in brief, if you are able to comprehend GSTR 1 and 3B effectively and correctly, 9 is nothing but a consolidation, but an opportunity is given for you to relook at those transactions and the turnovers and see if there's any adjustments required to in the presentation, because it doesn't see, GSTR 9 is a return which does not impact, or it doesn't enable you to make a payment and does not go and alter your customer data or your own data which is already there in GSTR 1 or 3B. It's only a information return being filed. So therefore you can only make a correction, but the effect of that should be given in the returns to be filed in 3B or 1 in the period within September, or if the tax payment separately should be paid through DRC03. Why I'm saying that is, so reconciliation is nothing but, annual return is a compilation with the correction as compared to any turnovers left out or not properly reported to give an effect to. And when it comes to 9C, reconciliation between the financial statements and this, maybe we will have to design that one more program for dealing with 9 and 9C at the operational level, which we can talk to the SIRC and design that program somewhere after a couple of months when the annual returns topic will be at heart. But obviously it should be before August, because any possibility of correction should be given effect before that. So this is the one more aspect which I thought would be relevant. So, and if I have to ask Venu, I think we have done with the time. But before we conclude, I would like to ask Venu, can you just give a step-by-step aspects for the return filing, from starting from collation of data, what should be done first, next what it should be done, next what it should be done to file GSTR 1 return and 3B, so that with that we can conclude for the day. Venu, please.
Good. Good. It more like, it looks like a summary. See, first and foremost is we know that the data which needs to be submitted is a line-wise data and consolidated data. Most importantly, you always need to have a sight of the macro view, the magnitude of what is the data that you are furnishing at a gross level. No, you cannot, you like a 10,000 could become 11,000 or a 9,000, but 10,000 cannot become, you miss the dot in between, cannot become 10 lakhs. That is very important, that you need to be having a sight of what should be the outer value that always comes. Now, how does it happen? How can you do? Take books of accounts. Take books of accounts. First, extract the sales register. Extract the sales register, Tally or whatever the software, extract the sales register, which comes, and I'm also taking, we are filing in between the month. Let's say I'm filing a return for the month of June. Extract the sales register April to June. When you extract April to June, what happens is you have the data of April, May, which have already been filed. Now, you know that the data which has already been filed, if there are errors that would happen, and honestly, once you file, the corrections do happen. What corrections? Someone would have changed it, some entry would have deleted, whatever. So get a magnitude value of what has been filed versus what is filed. Is there any difference? Do an audit of it. Identify what are the differences. Adding some lines, correcting some lines, whatever. So those lines have to be carried in the current month. Take the current month data, and most of the accounting softwares can give you a JSON file. Take the JSON file, you can upload it or extract it into an Excel, put it into an offline utility. There are resuming, say 5-10 records, you can go online, put the data entry. Once you have done, in the GSTR1, even before you file it, it will show you a summary. Each tabs, what we have seen when we entered into, it will give you a summary. Just copy those summary. It will give you two numbers, quantity and value. So how many number of records are there? What is the value of that? So make a note of it and match it with your books of accounts. Is it matching or not? So before you file your GSTR1, so you match the number of line items and the value of it. And you also know section by section, current month data, amendments data, each section by section, make a note of it and compare. Once you feel that data is correct, take a sign off. Or what do you mean by sign off? You internally, you get it approved by the accountant, your manager, your principal boss, or with the client. Just send an email, get an approval. Once it is approved, then you go ahead and file your GSTR1. That's a broad process. When it comes to your GSTR 3B, the main focus is on the input tax credit, because your liability is automatically moving from your GSTR 1. So when you are taking input tax credit, we have looked into detail both what is 2A, what is 2B. Please take a look at of that value. What is your eligible credit versus available credit? Now, as per books of accounts, it may say X amount that you have to take, but what is there in the portal is a shorter amount. So every month you should have a quantum of details. What is that credit you have not availed, which you are carrying forward to the next month? Those who are good in accounts and good with bookkeeping, you can post one accounting entry in the books as deferred credit. This credit is there, I have not availed. So with the line items, it will be easy for you to match with the government portal and account it in the next month. GSTR 3B is a consolidated data entry, so you necessarily needs to have a reconciliation of the input tax credit off-site which is in Excel or any other tool, which will tell you how much credit you have availed, how much you have not availed. Control that with your accounting entries, that this much credit have to be availed, this is what I have availed. The difference should have a line items, so have that reference of it. And once it is submitted, before you offset liability, as I have mentioned, prepare is like use your internal audit techniques. You just drag put a graph of how much is the gross liability, how much has been paid through ITC, how much is paid through cash. If you see a graph every month, it itself will indicate you that if there is something wrong. And if you see that the curve seems to be very normal, you should go ahead and submit your return. So broadly, these are the controls that you have to adopt in filing of your return.
Yeah, I think I think with that we can conclude for the day. I believe Mr. Naresh sir is also there. Before I think we conclude, we should thank Hello.
I just joined to. Yeah, am I?
Yeah, sir, your voice is breaking.
Am I?
It's not clear.
Anyway, so I just wanted to one of you, Rajesh Kumar, CA Rajesh Kumar and CA Venugopal, for sharing your extremely practical knowledge, the student community, making or clarify doubts of this GST filing. In fact, I would like to invite you again a series of as proposing on GST, as with you on a personal note, and I'll definitely take having this in weeks. Thank you, gentlemen, for sparing valuable time and enriching the student community. Thank you very much.
Sir, Naresh sir, I think tomorrow we are extending the session on the same time for questioning answers. So it was announced in the beginning. Tomorrow at the same time, we are also continuing one more session, I mean from 11 to 1, answering all the questions, because it was more than 150, 200 questions that come. So we are continuing the session tomorrow also for answering only questions on all the topics.
Yeah, we'll be sending the separate.
So we'll have.
For students, the link for tomorrow is not the same. You will be getting a new link.
Yes, the new link will be sent along with the feedback form where they can generate the participant certificate also. By evening, it will be scheduled.
Oh, participant certificate also. That's what will be available in the link that comes tomorrow. Thank you very much.
Thank you, sir. Thanks, everybody, sir.
Thank you.